What's up, fam? In today's video, we're going to discuss a pullback versus a bear market. So let's hop into the video, man. Let's get it. All right, fam. In order to get started, we have to understand what we were talking about, okay? So I have this book pulled up called the Candlestick Trading Bible, which is also in my free Telegram chat, and I will put the link below, okay? So we're going to start on page 54. Because this is a pullback, aka retracement, versus a bear market. Okay, and we're going to identify the two. All right, so we're going to start off right here. I'm gonna highlight it. Trending markets are characterized by two important moves. The first move is called the impulsive move, and the second one is called the retracement move. Okay, see the example below to understand what I'm talking about. Uptrend market, impulsive moves, and retracements. Right. So impulsive move, you got a big, nice move, impulsive, and you have a retracement. Impulsive, retracement. Impulsive, retracement. Right. And you also have to take in factor when you're looking at this pattern, right? This method right here on the uptrend, you have to consider what time frame you're using because the moves can be different because the time frames. So a drop on a 1 hour and 15 minute can be like a $4 drop, $5 drop. But a drop on the daily can be like a $20 drop, and and it's still a retrace from the impulsive move. Okay, so you have to take in consideration what time frame you're using. Okay, and we go down to page 55 or 56. We have a downtrend, right? Impulsive move, a big drop, then boom, retrace up, then a big drop. Now, I want you to pay attention. You see how on the downtrend, when we start making a downtrend, we start dropping to making what? If you answered it, then you got it correct. I mean, I said that wrong. I'm not going to edit that out. I'm going to keep that in. But if you said lower high, then you answered that correct, okay? So lower high, lower low, lower high, lower low, lower high, lower low, right? And then on the uptrend, it's the opposite. It's higher, high, higher, low, higher, higher, low, right? Take that into consideration, okay? So page 56, as we have a downtrend, as you can see, we have an impulsive move and a retracement from that impulsive move, okay? What is why is it called the retracement? Because it's retracing from the move that it just happened. What is retracing from? Okay, so when you see a drop happening, okay, what is this drop? It's retracing from this move, okay, or the last move. All right. So now that we have the understanding of that, now let's hop into the chart so I can show you some examples of a impulsive move and a retracement that's happening right now on SPY. So let's hop into it, man. Let's get it. We're going to start off on a 1 hour chart, and I'm going to show you multiple time frames because I'm going to show you the difference of what I mean of how the retracement could be different because when you're trading the bigger time frames, it can be a bigger retrace. Okay. So we are on the 1 hour, and we'll start off right here. We have SPY right pushing up. We ran from 493 to 510. Then we fell from 510 all the way to 504, $6 drop. That's a retrace, right? Nice retrace. And then still made a higher low. Boom, boom, made a higher high. Another retrace. Boom. Came all the way back down to 504, 505. Right? And just keep doing this, keep doing this, keep doing this. And then once we start dropping, start doing the opposite. Boom. Stay, right? Retrace. What this retrace from? This drop right here, right? It literally retraced from this drop from here to here. It retraced. And then we'll come back and test previous highs, make a double top, and then make a higher high, It retraced and fell. It was a fail retrace, and then continue to do what it was doing, right, to the left to make higher high, right, and then we start in this lower low, lower high, lower low, lower high on a smaller time frames. So that's how we can now a drop's coming on a bigger time frame, right? And now as we get to the bigger time frames, go to the daily. We have SPY right now, right? And we can go to a sample from the left, right? Even right here, when we start dropping right here, right? You see how we start dropping lower low, lower highs? We still retrace from this big impulsive move. From the bigger move is from 217 all the way to 480. So that's still the impulsive move. So we just got a nice retrace down on this big impulsive move, right? And I'm pretty sure if we go to the weekly, I'm pretty sure that's 50%. That's a 50% retrace, right? And look at that. So we from low to high, 50%, we came right to 50% and bounced right off of there, right? So it was a retrace from this big move, and SPY is doing the same exact thing. We got a nice big move from this bottom from October, November of 2023. And we got the first retrace. This is the first retrace that we're actually getting, because these little retracements is like, these are little retracements, but this is the first actual real retrace, because these not big drops from the big move that's happening. It's a bigger move that's happening up and not getting big drops. So this is actually like the first retracement that we're actually getting, like the first full pullback retracement. So this is what a pullback retracement, right? And a bear market. When you say talking about a bear market, you're talking about the overall market, right? The overall market is in the downtrend, right? And I like to determine that like using the bigger time frames, like the daily right here. I went to the 1 minute. Go to the weekly. All right, there we go. The weekly, the monthly, right? So overall, like we in an uptrend, right? So every dip that we get in right now is really pullbacks. It's just pullbacks to retrace from the previous move from October, November, when SPY was just at 409, and we ran all the way to 521. And it's not even the year. It's not even the year in yet, right? So we been was overdue for a retracement. We like any day this thing is going to retrace, we get a pullback, right? So I showed y'all exactly, the textbook definition and like literally a textbook example, which is in a free Telegram chat. With the link would be in the bio. And I also have a YouTube video explaining how to find an average of a move. So how to find the 50% of the low to the high, how to find an average. So I do have a video of that on YouTube, which I will drop below in the description as well. Other than that, man, entrepreneur, make sure to like, comment, subscribe, man. I'm out. Let's get it.